Welcome back. My name is David Siddons, and this is the Better Decisions podcast. And in this episode, I have in front of me Shakira Sanchez. For those who know us, they know our site. They know Shakira is our territory manager for the Urban Core. And Shakira, thank you for coming in to do this with me.
Thank you for having me.
The reason we're doing this podcast, or the subject of this podcast, and the reason we've got you in, is because we're going to discuss the rental market and the effects of the rental market and the influence of the rental market on the home, the condo and the home market in terms of purchase and sale. Because this is for a section of our report, our 2022 report, that covers, I think, part 2 is the rental market. And typically on a report, you might think, okay, we're just going to focus on what's selling, what buyers and sellers are doing. But it does play into that. And because you are the territory manager for the Urban Core, Brickell, Downtown and Edgewater, which is the most heavily or most densely populated part of Miami and has the most, I guess, dense level of renters over owners, it seemed appropriate to have you in, and you know your numbers, you know your stuff. So let's dive into this.
Let's do it.
So the first thing, ironically, as we sit here on the 23rd of June, there was an article that just came out this morning.
Yes.
What was that article about? Tell everyone.
Well, I feel like another one bites the dust because we have one of the biggest hedge funds in the world that is actually relocating from Chicago to Miami. And this is Citadel, for those that don't know. But this is going to be very, very telling for, I think, the entire South Florida market, but predominantly in Brickell. So it's going to be very, very nice to have them in.
And it's not the first. We've got other hedge funds that have moved down here.
Yeah.
And as people are coming down, you know, a lot of people are trying to acclimate still. We know that when people move down to South Florida, it's not the same as Chicago. It's not the same as New York. It's a different environment. And you're trying to figure out where stuff is. So, you know, obviously you've got a lot of people coming down, companies, and they're deciding to rent. And they're going in Brickell.
They are. So, and I think the reason why for those that have been able to acclimate so well, why they gravitate towards Brickell is because it's pretty similar to the lifestyle in Manhattan.
Yeah.
You walk to work, after work, you grab a drink, you grab dinner. Some are even in the same hospitality groups as the ones in New York. So it's kind of like home away from home. Yeah. And it's better weather. Well,
Brickell is summed up. It's very simple to sum Brickell up. It's the second biggest financial district in the US.
Correct.
It's that straightforward. You know, you've got Wall Street and then you've got Brickell. And the rental market in Brickell is obviously very, very strong. Take us through the rental market. Take us through the story of the rental market.
So I think the story of the rental market, believe it or not, started from the buying power. So a lot of people that were coming down initially were obviously interested in being a part of this entire movement. But I have seen that some people are still a little reluctant to actually buy something, which if you think about it, and I'll dive into the numbers, but the rental rates have gone up, I think, even more than what the mortgage payments are, even with the high interest rates.
And that's the crux of this initial conversation, the rental market, or the incredible strength and growth, very fast growth of the rental market. We did a piece for the Channel 7 News, where they quizzed us and like how the journalist said, oh, there's a rent that went from 4,000 to 8,000 to 10,000 in the space of like 2 years, which is absolutely bonkers.
I completely agree. And that particular example was in a pretty luxury building in Brickell. Yeah. But this is happening across the board. I mean, this is happening with buildings that are even a little bit more generic than others, which I think is a very good conversation to have with those landlords or investors, sellers, more so like the reluctant sellers, because this isn't going to last forever. It's part of the cycle. As we know, the condo market is a lot more cyclical than, let's say, land or single families. So I think that it's a conversation to kind of take advantage of this current moment. Capitalize while you still can. But with so much that's going on domestically and internationally, I think that we definitely have to kind of not just look at to the end of this year, but in the next 2 years, 3 years, 5 or 10. I think people have to be careful with what they're doing. Where
are we right now with the rental rates? I mean, like, what can you pay? What does what does someone in the Brickell market who wants to be in a newer building, let's say it's a 2-bedroom, let's just use a working example. Say they want a 2-bedroom in Brickell in one of the newer buildings, something that was built in the last, let's say, 7 years. Yep. What are the rental rates now? What were they a year ago? What were they a year before that?
Right. So I typically like to go back to 2019, which is previous to 2020 and all the craziness. So for example, I'll give one that I actually personally really like, which is Rise at Brickell City Center. It's great. It has a beautiful interior design, and it's in the center of it all. So if you're working in downtown, because there are offices in downtown that people are still moving towards, although Brickell takes the cake, it's the number one. But it's kind of in the middle between downtown and Brickell, so people really like it. And let's say a 2-bedroom, 1,200 square feet. This building was done in 2015-16. It went for, in 2019, around 4,000, maybe 4,200, 4,300. And now we've actually closed on a couple just this year alone. It's gone from 6,800 to 7,200. And that's that we actually get discounts, because a lot of people are, even there's barely any wiggle room with the rentals by themselves.
And Brickell typically, and I started in the business in Brickell. My first office, for those who don't know, I started in the business 2008, and my first office, pretty much my first office, was in Brickell in 2010. I was in Brickell when after the crash, and there was all this new construction, all these buildings, and then everything kind of boomed. And we constantly have this relationship between boom and bust, where we build a lot, everything gets rented, then everyone sells, then everyone buys it back, and everything starts happening all over again. These rental numbers are astronomical relative to what we've seen in the past.
Correct.
But in terms of what's available, how much is available right now in the market when you're going in looking for rents? Because you were giving me some statistics about, these numbers are really, really high. But let's say you're running around Brickell today and you're trying to find something to rent. How much is available? What's the availability level, the inventory?
Right. So rates have gone up in terms of how many are actually available, but they are sitting on the market a little bit longer. So like I said, a typical 2-bedroom in Rise on average probably sits around like 3 months, so 90 days. And they start around like maybe $7,700, and then we get them all the way down to $68,000, which is still very good. I just think that that's only going to continue.
When did that start?
That started probably around like 18 months ago or so.
Okay, so we've had people jack up rents.
Right.
A few were sitting on the market longer than they should, but there was also a very high level of absorption into that market.
And I'll actually correct something here. So 18 months ago, we started seeing that the prices in rents began to increase. Mm-hmm. But maybe the beginning of this year, then we've seen them sit down a little bit more.
Oh, that's interesting, because the beginning of the year, this is really where our report comes in, because the last 6 months has been different. It's different to last year, and now as we move forward through 2022, we're noticing that behavior is starting to shift and change.
For sure.
So we're trying to understand how much is it going to continue to shift, how much is it going to continue to change.
Right.
With all of this increase in rental rates, one question that everyone seems to have is how do and again the news channels have brought this up, how do the local population of Brickell, of downtown, of Edgewater, let's talk about the urban core as a whole, how do they afford these rents? And can they afford these rents? And can they continue to afford these rents?
I think that the local Brickell resident before this whole wave was pretty comfortable. They lived and they worked in Brickell. It's a relatively younger crowd from like 25 to 40, 50. So it's a younger crowd, but in the sense that they're all young professionals as well. They live and they work there. So the median salary for a Brickell resident is pretty much a base of like 80, 86.
Yeah, I noticed that there was a statistic, and we'll share this on the blog. So if you read the blog that's attached to this article, if you're watching this on YouTube, you can go into our website and look at the article itself. There was a statistic that came out from a source, and it said, yes, in the younger age bracket, 24 to 32, I think it is, the salary was about $86,000. When it goes up to the older age group, it goes up to $120,000.
Right.
But that, and if you're making $120,000 a year, and you've got a rent of $7,700, do the math.
60% goes out the window.
It's simple.
I agree.
Yeah, I mean, 120.
I think it's, and again, this is like what's happening. But again, I think that this market is kind of like going through its ups and its downs, and at the down, it's kind of being saved in a way. And I'll tell you why, because obviously affordability is a big issue, even for the luxury market, which is pretty crazy to think about, that someone who, has a 6-figure salary is honestly considering whether they should move out of the condo market because it's so crazy. But then single families are also taking a moment. So there's a lot going on. But my point here is, all of these companies and businesses that have announced, I mean, more than 40 of them just last year, that have announced expanding into Brickell, these are bringing thousands of jobs. And remember, these are people from up north. Salaries are historically a lot higher. And if you look into it, and I'll include this, it's in the report, but the people that are basically strategizing to expand or just shift their headquarters into Brickell, this is a talent strategy. I mean, obviously there's a tax benefit and the commercial real estate is a lot more affordable here than, let's say, New York. But the talent strategy is actually what they're most interested in, because obviously here we have a huge pool of diversified cultural backgrounds. This is a very good base for Latin America, especially I feel like now we're going to see a lot of young professionals coming from Latin America. So, you know, I really do think Brickell is going to be and continuing to shine. And I think with that influx of higher salaries, it's going to definitely, at least I hope, help the situation.
I think when you watch this, rather than us give all the names, what we're going to do is we're going to scroll at the bottom of the screen all the names of the companies that have moved into Miami with a core of Brickell and downtown Edgewater in the last 12 months.
Yeah.
Well, let's say last 18 months. It is an insane...
Yeah, we might have to make this a 40-minute video.
It could go on. Keep watching it. Just watch it while we're talking. But at the bottom, you kind of see all these companies moving in. And these are household name companies. These are a lot of big brand names.
These are some of the biggest players, not in the nation, but in the world. And again, thankfully, we have clients that are in these networks, and we've actually helped them relocate them. And actually, yesterday evening, I had a conversation with one that works for a really, really good hedge fund that just relocated to Brickell. And he's, I was just trying to get a little bit more of a deeper sense as to why do we continue to see all of these businesses coming down. I mean, Miami really has to be much more than it's a open city or state because of COVID. I mean, that's long gone.
Yeah.
There's something else here. And
there's going to be a legitimacy to it as a city.
For sure. And obviously these people, all they think about are numbers. And I ran the numbers on the commercial real estate over there. And at a Class A commercial building in Midtown, I mean, this is like located on Park Avenue. They go for like $100 to $150 per square foot. And 830 Brickell, which I personally love to share with clients, is going for about maybe like 70 to 100. So and this is new. This is being built. This is going to be the mecca of office towers. I mean,
so the carry for commercial leases for these big companies is 50% from what it is if it's up in New York. Yeah. And if you've got obviously the workforce here, and you've got the lifestyle here, and the tax savings, which is one of the big driving factors to move down.
It's
substantial.
People always talk about the taxes, but if you really look at it in a numbers game, like it really does affect these people. And again, New York is a beautiful city, and I've spoken to a lot of people who are diehard New Yorkers and have always had kind of like a flirtation with Miami, but now we're seeing a more permanent tone with all this. I mean, their friends, their families. If you ask any New Yorker, it's not about when, or it's not about if, it's about when. And I think that that's very telling. I mean, these are moms that are coming down with their kids. These are young professionals that are coming down by themselves or with their families. I mean, I'm pretty sure a good amount of these businesses that have come down, and you can read the quotes, but their employees are the ones that are also requesting this. Mm-hmm. They're requesting to relocate to Miami because they also can incorporate the hybrid work model. So why would you stay stuck in a city where it's obviously very nice, but the weather is completely different? The taxes are a huge problem. I mean, when someone once told me that it's faster to get and fly from the city, New York City, to Miami than to drive from the city to the Hamptons, I mean, that's a no-brainer.
That's nuts. That is nuts. And that's the thing. It's quality of life. When you look to social tensions, you look to crime, look to some of the other aspects that other cities have had. But we've heard this pitch. You've heard this before, so I'm not going to give you a pitch of why to move to Miami. We kind of know that. I'm going to play devil's advocate for a bit. And I think that's what people want, because there is pull and push. We've had a chat before the camera started rolling. The realities of any economy is that there's a push or a pull. And we could argue either side quite comfortably. And if I chose to just focus on one area, then I could prove my point that why you should do one thing. And if I focus on another area, I can choose why you should do another. Right. There's definitely some forces at play. Now, as we sit here in end of June, beginning of May, we had raised interest rates. We had a big stock market correction. We had a lot of money wiped off the books for stock values. Whether it comes back or not, I don't know. I mean, that's another conversation for someone else, and to see what'll go on in the future. But given the amount of migration of companies down here, including the tech groups, and they really got heavily hit, do you think they can still support the migration down into South Florida, into Miami, let's say using Brickell example, moving your office to Brickell or around that kind of area, maybe, Midtown? Can they still do that in light of a faced reality of a bull market?
Right. So I think you could look at this from two perspectives. So from like a business standpoint, to these businesses, companies that have been kind of thinking about expanding. I mean, Miami's a really business-friendly environment. And honestly, Miami is the number one place in the United States for international banks. Yep. So I think that there is a lot of capital that is still in the works. A lot of venture capitalist firms have been actually coming down as well, along with the hedge funds, the insurance, the law groups. I mean, I think that there's a lot of money that people could be making in terms of a business standpoint. And then personally speaking, the hybrid work model is not just like a phenomenon. I mean, this is really happening and people are able to work
it's sometimes
at home.
A little bit, the hybrid work model, I sometimes feel people, they throw the word around, but it's a bit abstract and people kind of it's like a buzzword thing. But you've got to understand what it really, really is to really understand the effects of the economy. And it is a massive effect. And when you do have that ability to, I've got laptop, will travel, I can because it used to be said before, I could work from anywhere. Could you really? Could you really work from anywhere? Because your clients and your associates, and if you've got enough critical mass, and I think this is part of the conversation when you get to the hedge funds and the tech crowd, they need each other. They rely on each other. Yeah. And if you are,
especially the startups,
the startups, if you are one hedge fund and everybody else is back in New York or California, or your tech, and the same thing applies, and you're the only one here in Miami, that's it's a problem.
I agree.
But now there is, again, it's like going from one cool party to another. Once you get enough people at the party gets going, it can sustain.
Yeah, and I think that's what's happening. That happened with people on an individual level, right? So we saw everyone kind of migrating, and then all of a sudden this huge wave came. But now we're seeing this with businesses. And again, I don't think it's going to stop necessarily in the sense where they're just going to come here and leave. I mean, if you look at pretty much South Florida as a high-level overview, and this is going outside of Brickell, but there are office towers that are being built in Wynwood, which is crazy. If you would have pitched this to a developer, let's say 2 years ago, they'd be like, you're out of your mind. Yeah. Really, but that's what's happening. And with Miami Beach as well, I mean, there are significantly impressive firms that are backing all of these areas, and I doubt that they're doing this without thinking of everything.
Yeah, they're doing their research. I mean, we get calls all the time, and we always say to our audience, if you are relocating into Miami and you're thinking about it, and you want some good counsel, you want some clear optics, and you want your peripherals expanded, because the reality is that our job is to widen your peripherals. Shakira, you have an expert knowledge on Brickell, but each territory manager understands and knows all these other areas. But nothing works in a vacuum. We've said this a million times. Everything is part of a greater system, and you've got to understand that greater system. And the greater system outside of the rental market within Brickell is the single-family rental market that exists as you go further south. And I'm going to touch on that quickly because it's something that we just dealt with ourselves directly. We had 2 properties that we ended up selling, both of them around the $4 million mark. Both of them we put into the rental market, and the rents have been between $25,000 and $30,000 a month. And they rented in one day. One day, I literally made phone calls and it was like, yep, we'll take it. Because there isn't a lot of that product around. There isn't a lot of availability of rental product. And obviously, as we look at this, we're like, can we sustain those numbers? What you're telling me is with this crowd, with this audience of new, the new demographic, the changing demographic, absolutely they have the money to, the desire to, and that will continue. So going into the advice area, and I think it's good to get into, obviously we've got the companies coming in and everyone's moving in. getting into where let's get into some advice, because everything that we say, everything that we talk about, the motto of our group is help clients make a better decision. And that is why this podcast is called Better Decisions, because we're trying to help people make the right choices financially.
Right.
Personally, it's about where you live and being happy, and we want to help you with that, but we also want to be sensible to your pockets. So talk us through the advice that you would have for those people who are renting right now and have maybe been renting for a little bit, because 78% of the population out there in Brickell, you are renting.
Right.
Where is this going to move, and how is it in terms of if you don't rent, if you buy?
Right. So, and I think you raised a really good point, which is you can talk about numbers all day long, but a good majority of the people we work with are end users. Yeah. So the emotional side of it also comes in. And I've had conversations with renters who are paying $7,000. And I say to them, I go, you have no idea what you could be saving if you were, even in today's climate, which is like 5%, you could still save money. But I think it's important to always provide the knowledge to clients and guide them the best way you can. And also, let them make their own decisions, right? So with this particular pool of people that are still very much into renting and not buying, whether it's a personal thing that they're not 100% convinced yet, or they have a belief that the interest rates will come down, and obviously, historically speaking, they will. It's just a matter of when. So I think that perhaps it could work out for them in particular, because we are seeing that inventory, rentals, and resales are sitting a little bit longer. Sellers are the ones that have finally decided to sell, might be realizing that timing was something super crucial for them. And I think that maybe they could have a little bit more buying power. And I say that because I feel like any industry right now is kind of feeling a little bit of a shift.
Yeah.
But I really do believe, and it's not because we're licensed to do this or this is our advice, but I really do believe that real estate is going to be one of the strongest vehicles, especially with so much volatility in the other markets.
Yeah, if you do the math for renting to owning right now, and again, it depends on the price point, because I don't like the tail to wag the dog. People get very caught up into, well, if I buy, and this is what happened the last time. The last time the market went down in Brickell, which I predicted in 2015, happened because there was a flood of inventory into the market. It saturated the rental market because almost all the units were purchased to rent. And then the renters suddenly went from having 2 or 3 choices to 12. And so at that point, the rental numbers came down. The sellers looked at their figures and said, you know what, this isn't giving me a great return. Maybe I should exit now. The rental market is still obviously very strong with the migration of people coming in. It's growing, population's growing, Miami's growing. We get that. With the rental market, let's say you've got a $7,000 a rent. Let's say you're paying, let's use a round figure. Let's say you're paying $7,000 a month. Yeah. What would that look like if you were to buy a unit that's renting at $7,000 a month?
Right.
What's the purchase price
so
on that
that particular unit is probably worth like 1 million. And if you were to do it, obviously a lender could give you better numbers, but if you were to do it as a primary home with 15-20% down payment, you're probably looking at around maybe like $5,400 a month. So again, and this is happening with all types of brackets.
And you might even be able to get less than that, because if you shop around, there are cases, and again, we don't like to speak generally, because there are some product that's overpriced and there's product that's well priced.
Right.
And in certain cases, it's possible to buy a unit that's renting out at $7,000 a month for under $1 million. You might be able to get it for $850, $900.
We just did that last week. I mean, we had
what's that? Take us through that story, because I love working examples for everyone to get their teeth into.
Yeah, of course. I mean, this was one particular building in Brickell that was a 2-bedroom plus a den, which I also really admire that type of floor plan, because the den is obviously doesn't have a window, but a den makes a difference. I mean, people are working from home. Yeah, it's a real thing. But in reality, that particular unit, so it's 1,300 square feet. We closed it for $955.
Okay.
And this was not as a primary home. So it was a second home, which is a lot higher interest rate. And they went in at about 25% down payment, which depending on the building, you could go as little as 5%. I personally don't recommend it, but I think, there's wiggle room there. And they have a monthly payment about $5,800.
Okay, so they're all in at $5,800.
$5,800, and that unit today would rent for maybe $7,500.
So the math is really simply there. We get a lot of calls actually from interestingly enough, families, parents, when they've got their kids at University of Miami, and they're thinking, okay, my son or my daughter's going to be at college now for the next 4 years. And should I be paying rent for the next 4 years? Well, the rental numbers are really, really high. So if you do the math of what you're going to be paying out on rent, and then in 4 years from now, the value of that asset, there are many, many cases that I can give you that it absolutely makes sense to purchase something and not to rent.
I agree.
And so there's a very good argument for buying and not renting with the right product at the right price point.
I agree.
But I'm going to go to the other side of the coin, which is when is the time not appropriate to be a buyer, when you should be renting. And
probably like 3 years ago.
Yeah. Well, then there are cases now historically speaking, we can look back. If we look forward, and I was sharing this with you just before we came onto camera, and if you look again at our 2022 report, the one crash correction or continued growth, quick plug, see the link at the bottom. That one, we're getting into, there are certain sectors within the condo market that currently have just under what we call a balanced supply of inventory. It's still a seller's market,
yes,
where you can get top dollar. But you've got inventory starting to grow. And I know history doesn't repeat itself, but it can really rhyme. If you look back to 2015, 2020, and look at the statistics on the crash correction or continued growth, you can see that there was moments in Brickell's history where we were up to 80, 90, 100 months of inventory. There is history in Edgewater, the same thing. There's history in Sunny Isles. And at certain price points, if inventory grows, and again, we're watching this very, very closely, you're in a position where prices will then stop going up, stop even correcting, stop leveling off. They can even start to go down because supply and demand is the fundamental driver of any economic system.
Right.
And so there are certain price points within Brickell and Edgewater and downtown that you've got to be really aware of. And if you own a product in that price point, take us through like the realities of what you got, because the numbers have done really well the last couple of years. If you bought 2 years ago,
that's why I say,
how much did they make? The condo market went up like a stupid
you know
amount.
What? And I love this point because people talk about that it's a seller's market, but I could argue it's also a buyer's market, because if you bought a year ago or even like this same time last year, you're depending where you bought, obviously. But in Brickell, I mean, they've appreciated. So and this was price per square foot last quarter. In 2021, it was about in the million range. It was about 808 per square foot. Mm-hmm. And now this quarter one of this year was 838 per square foot.
That's dollars per square foot.
Right. So, and again, I think that's like 15% increase. But again, these are things that, it's pretty crazy that you're just holding something, and compared to the other markets, it's appreciating and it's doing well. And again, if these people are buying into this market and they're planning on holding it, this is a cyclical thing. This goes up, slightly goes down and corrects. But if it's good product, which I'm sure, you've definitely pioneered that in a way where it's not just
look at our best
sell.
Condos in Miami. Just
we just
look at that. Look at that
look
article
down here. No, but really, I mean, isn't that what we always talk about? We talk about definitely buying and making those better decisions with the best product that there is. So when it saturates, you still have that leverage and that competitive
because one
advantage.
of the biggest problems that you can get with the condo market, particularly with someone like Brickell, and when you're renting and you're looking at renting or buying conversation, there is a lot of generic product. There's a lot of same but different product, very kind of middle of the road. And that's the stuff that got hammered in the last cycle. And it will always get hammered. So at some point in time, if you've got something generic, it's going to correct. And rising water raises all boats, but at the same time, you don't know who's swimming naked till the tide goes out. Yeah. And when the tide goes out, there are buildings that have high carry costs, high HOAs. They've got assessments coming. Yeah. There's a whole slew of stuff that can really negatively affect the psychology of a buyer looking to buy that particular product. And if you look into Brickell, there's an introduction of luxury product, and we did a podcast, the third one along with Ugo Colombo, right. And Ugo, he started in Brickell when he was in college at University of Miami, and now he's, I won't say how old he is. You can watch the podcast and figure that out. But he's been, for decades, he's been involved in Brickell real estate, and he built Santa Maria, and he built Bristol Town, Flatiron, some of the best. And those what the grade, the AAA rated buildings of their time. Yeah. And still considered very good, but there's not that many of them. And today you've got the Four Seasons, and
Carbonell,
you've got Carbonell, and there's a new one coming, which is the St. Regis at the south side of Brickell, which is probably the first real luxury condo that Brickell's had for many years, at least a decade, more than a decade. So there are certain well-insulated buildings that their value is protected because it services a luxury sector of the market. And those will rent very well because you've got the guys from Millennium and the guys from Citadel and the guys from Goldman Sachs and all those guys. Those are the guys that can afford to live in that. And with the population growing and the number of those guys coming in, it's not that much product. It's not. But if you get into that middle range stuff, the stuff that was bought for $600,000-$700,000 that's now $1 million, be conscious that kind of product over time, if more comes in, gets saturated, there could be corrections. And even worse, that stuff that might be middle of the road, but now it's been touted as luxury and it's got a luxury price ticket on it. Yeah. Like that 3 to 5 million range. That's when you've got to be careful. If you own in Brickell in the 3 to 5 range, look at the report, look at where the trajectory is going for the inventory.
I agree.
And weigh that up. Because that's going to be important to you.
How will it perform when some of the best is coming? And honestly, I'm glad you brought up St. Regis because it is truly going to be like the new gem for South Brickell and for Brickell in general. Yeah. Funny enough, I had a conversation with a seller the other day, and he is thinking that with all the pre-construction condos and the price per square foot that they're currently going for, which is a little bit higher for Brickell, I find it very interesting that they think just because something that is truly good product like St. Regis, they could go for maybe north of $1,400 per square foot. Yeah, he thinks that, but he thinks that something like his, that is definitely not St. Regis material, will go for $3 million where... just won't happen.
We use the analogy of being in a car park. Okay, just because you park your bicycle next to a Ferrari doesn't make your bicycle worth a Ferrari. Okay, you park next to it, you are not it. Yeah. And that's the misconception. People assume, the market's going up because all these people are coming and they want luxury, and then they're gonna pay for mine what this new product is. Well, no, they won't, because there's plenty of other buildings and other neighborhoods that they could go to if they want luxury. So don't assume that. It's a big mistake, and we see it all the time. Don't drink the Kool-Aid. Yeah, do not drink it. And I think that when we're talking about this rental market, of course, we're not talking just to renters, we're talking to landlords. So if you're a landlord and you own a unit in Brickell, downtown Edgewater, talk to myself and Shakira. We'll give you the information that you need on the market. Understand, if you're a renter, that the rental market is obviously very, very hot. Don't assume that you're going to see it drop by 50% because we're heading into a more delicate economic period. There's still a lot of people moving in.
Yeah, there's still a lot of demand. And again, we're seeing this just alone with the amount of businesses that are expanding and have already relocated. The office isn't ready yet, but they're already here. Yeah. So I definitely think that the demand is going to continue to come. I think that buyers are a little bit more hesitant to buy just because of the mortgage rates. And these are the ones that are predominantly dependent on getting a mortgage. I know we've spoken about this so many times, the amount of cash buyers really. But I definitely think demand will continue to grow. Sellers, landlords, investors who have a condo in the urban core, sincerely, they should really take into account to what's to come, not what's happening now, because that's already done. Yeah. Interest rates.
Look at predictions. Look at what the statistics tell us.
Yeah, and honestly, that's why I kind of like to refer to history, because it, like you said, it doesn't repeat, but it rhymes. And this isn't a conversation about a CMA or how much you can get today. It's honestly about what you're willing to lose, because some of these condo owners and landlords and investors will take a hit. Yeah. And again, this is our job to speak with them and share this valuable information with them, because most people won't. It's
important that when, even actually in one of the last podcasts, I said that very important point, trees do not grow to the sky. Mm-hmm. So many people have not seen an economic downturn, ever experienced one. So it's too abstract. It's too abstract for their heads to get around. And they're convinced, well, you know what? If it's good today, it's going to stay good. Well, guess what? Everything has a cycle. The economic cycles are called cycles for a reason. There are guaranteed peaks. There are guaranteed troughs. Where they and when they happen, we don't have an exact crystal ball on. Yeah. But there are indicators to predict. And we have one very good indicator right now, which is the current absorption rate based off what's being newly listed to what's currently going pending in that last 30-day period. Yeah. And right now in many sectors, we have more new listings coming onto the market than that stuff that is going pending or going into contract. Yeah. And that means more inventory. And more inventory means a change in prices, a pressure in prices. Yeah.
I think, and before we move on to the next one, I think that that's important to kind of give attention to, because with everything else, every other type of vehicle, every type of asset, it moves, it fluctuates so quickly, one day to the next.
Oh, yeah.
So I think that real estate is like one of the most conservative, but probably the best vehicle right now, because it's not one day to the next. People are seeing warning signs, and they're seeing that rental apartments are, sitting on the market for a little bit longer. We're seeing discounts now with resale markets. These are little things that people
economic
don't take
cycles.
Into account.
Yeah, I mean, a trade cycle within a piece of real estate is 60 days, roughly 60 days. You can have, I'm not even talking about crypto, but you can have other asset classes that fluctuate within the same day and fluctuate very, very, very aggressively. And again, mass psychology comes into play. Our psychology takes a little bit of time for people to wrap their head around. Yeah. When it does happen, when the press does come out with a piece, like going back to the very first comment from this start of this podcast, when an article comes out, typically it's either really, really good or really, really horrible. There's very little like, today things were okay. Yeah. No one's going to read that. It's got to be one or the other. So we're conscious of how that affects into the mass psychology, the psychology of the masses, the groups out there, and getting clear optics, because you've got to know who you're taking advice from. How much of a vested interest do they have? What is their job? If you're a journalist, your job is to get views. Your job is to get clicks into that article, on to subscriptions into the newspaper, the magazine. Right. So it's got to draw people's attention. Middle of the road information does not draw attention, nor does very complicated messages. But the reality is that our markets are very, very complicated. There's back and forth powers in force that we've discussed, that we can prove one side or the other quite easily if we wanted to. Yeah. But you've got to get granular. So you've got to get right deep into the product, into the building, into the line, into the price, to know whether it's a good deal or a bad deal, whether you should rent, whether you should sell, whether you should buy, whether you should invest, whatever the situation might be.
I agree. It's definitely a one-on-one conversation, which is, I think that's why we always invite people to give us a call, because I can't just say what would be the best position or solution for someone, because you have to really understand what they're looking for, what they're afraid of, and what's to come. Yeah. Because a lot of the times these messages are already too late. It's already happened.
By the time you've read it in the press, it's already happened. Yeah. We're going to talk about one final thing that we kind of touched on, because it's a subject that everyone seems to be getting into with rentals. Mm-hmm. Airbnb. Yes. The whole Airbnb phenomenon. Airbnb. God bless it. and I know I want to get your take on the Airbnb in the condo market. We've seen some really crazy stuff in the Airbnb single family market. And again, there's some activity that Airbnb is reliant on the market of people coming in short term to rent properties out to enjoy as vacation. Now we know that when economies don't go so well, people do pull back. Yeah. So I want to get your take on the Airbnb condo market, the situation of who it competes with, such as the hotels and how they're handling things. And then any other, optics that you've got on that, so people who can understand whether or not they should be investing in an Airbnb, whether it's a good idea or probably they've missed the boat.
So Airbnb is really interesting, and I feel like the best way to compare it would be, it's like the crypto of real estate, right? So like it comes and it goes very quickly. No, really. I've seen people who do very well with Airbnb, whether it's single family, whether it's townhouses, or whether it's a condo. Condo probably the last of the three. But in reality, I don't advise anyone to get into Airbnb. And we see this with condo market now. And again, it's the proof is in the pudding. there's probably maybe like 3 or 4 buildings in all of Brickell that actually allow Airbnbs. I think that it's a huge thing where if you have a party or you have a trip coming up and you put 10 people in a 2-bedroom condo, it's not good for the building. It's not good for the unit. Sometimes the condo owner has no idea what's going on.
Does it affect the resale of that?
100%.
Because I'm really concerned about any building that has a massive amount of rentals. And if you've got huge turnover.
It does. But it also depends on first of all, the lease term, what the building actually allows, because we've seen that these monthly rental buildings don't really do so well. Yeah. And there's a good amount that I'm, more than happy to share, but there are a couple buildings in particular in Brickell that are branded as Airbnb, and it honestly does not help it in the least sense. That transient environment, remember, a lot of these people that have been coming down are end users, and the investors aren't here for the short-term returns. I think a savvy investor is here for the long run, which is why you buy a good condo.
Yeah, speculators get burnt and investors make their money because they understand how to hold it.
I think it's the most volatile of structures of how to do real estate.
For sure.
I don't, and I think that it's going to be the first one to get hit.
Well, it's like you said, crypto. When it's up, it's up. When it's down, it's really down.
Yeah, and I think those are the quickest to like kind of drink that tea, where it's like if the friend is doing it, the LL,
Well, Drew, who was on our very first podcast, mentioned the Airbnb phenomenon, and he cited the example that a lot of people, they go in and they buy an Airbnb, they leverage it, they take the money out that they're making to pool together to buy another Airbnb. So they end up buying as many as they possibly can, and they all lean into each other. So it's a daisy chain effect. They all have to do well. And if one doesn't do well, then guess what? You've got a whole big problem to deal with.
It's a domino effect. And those are probably the highest interest rates too. I mean, and again, now with everything that's going on, I personally don't advise anyone to get into it. There are a significant amount of people, and there are a good amount of hotels that are going to be coming into the pipeline, condo towers, apartment buildings. So I think that Airbnb is going to be the one that fluctuates the most. I always say, in particular, Airbnb, it's just the rates that they go for, the prices, low season, high season, I just don't really advise. I've seen it with buildings in Brickell. I mean, it just doesn't look good. It doesn't help the value. It doesn't help the rentals. A lot of people are the first ones to sell. It depends on who you're talking to, I guess.
Yeah, I'm trying to get an expert in to actually talk about the Airbnb. So if you watching this and you've got an opinion, give me a call. I'd love to hear your voice on this. I know, again, we don't like to generalize. It's not as simple as that. There are people who will do very well out of it. I think those people know exactly what they're doing. They know the numbers. They know the sustainability of the product that they've got. But I think it's important that when you get into a condo situation, you're not the one driving the train. The homeowners association are going to govern, carry costs, and then additionally to that, if the market changes at all and everybody runs out the door, a lot of people get caught up into how much I can make on rent. If you're an investor and you're coming in to buy an apartment in Brickell or anywhere else, whether it's South Beach, Miami Beach, Sunny Isles, Southside, whatever, and you're in the business of renting it out, be very aware that if you're in a building where a lot of it's being rented, and the rental numbers drop, then the value of your property is negatively affected, drastically affected. Yeah. That's exactly what happened in 2015. Yeah. Exactly what happened. Yeah. And those are the guys when they come and go, well, I'm making an extra $1,000 a month here on my rent. Well, guess what? You just lost $250,000 off the baseline of your property, or 500 or $1 million. So you're worried about 12 grand less in a year or 24 grand less in a year. Well, guess what? You just lost 200.
Yeah.
So don't let the tail wag the dog.
If I were to have seen a decent building in Brickell that does do Airbnb, I would say, okay, there's something here. But I can't name one building that I would recommend anyone to buy in that does Airbnb.
Give me your favorite 3 buildings in Brickell.
Okay, so they're not, and this is perfect. We have the blog, the report as well. But so for me, I really like to look at the value. And again, I look at how the building is managed financially, the environment, the ambiance. One of my favorites is Carbonell in Brickell Key.
Yep.
It's a very solid building. Four Seasons is one of the best performers in the market. And I also think that Santa Maria is very good.
Yeah,
Santa Maria,
one of Ugo's. Thank you,
yeah,
Ugo.
one of Ugo's. But you know what? It's one of the largest floor plans in Brickell. It has, obviously, it's bayfront. It's beautifully done, beautifully managed. It's in South Brickell. You know, and again,
good buildings. And I'll add into that a new one coming, St. Regis. I think that's a good building. It's actually one thing to part and say is that within our best condos report, whether it's the new condos or the existing condo product, there's a lot of services out there where you'll go and you'll see rankings of buildings online, and it's very subjective. It's like best views, best floor plans, best amenities, and they grow these scores accordingly. But it's so subjective. What we've got is our ranking system actually adds a couple of economic indexes to that, which is its performance against other buildings in the neighborhood. It's dollar per square foot against other buildings in the neighborhood. So, you know, it might be a great building, but if it's twice the price of every building in the neighborhood, guess what? It might not be. Again, or within that class, because it's important to recognize that certain buildings exist in classes that are outside of that neighborhood.
Yeah. And those in particular, those three, those aren't new. Yeah. I mean, those have been on the market for as late as 25 years.
And then on top of that, the final point that I like to add in there is the economics of the neighborhood, because different neighborhoods have different economic performances, and historically speaking, and even within neighborhoods, even within like Brickell, for example, there's more than one area of Brickell. People misunderstand. There's the south side, and there's the north side, and there's Brickell Quay.
Yeah. I agree. And each is actually very different. If you look at Brickell on the map, it's quite tiny in geography, but it's pretty nice.
Most neighborhoods are like that. I think, to be honest, we can agree that you can't just take one neighborhood. No. The expert, the skill that you have as territory manager is that you know the sub-markets and the sub-markets of those sub-markets. Yeah. So you go all the way down from the neighborhood to the sub-neighborhood, to the building, to the line, to the best in that line. It's super granular.
I agree.
And you're an expert at it, so thank you. Shakira, I think we've covered a great amount of information today.
We got some.
I know we could keep talking for hours. If you want more information, call Shakira, call me, see our information below. Please subscribe, please like, and hope you join us next time for another David Siddons Group video of Better Decisions podcast.